Well, first of all, let me give you, if I can, a brief snapshot of Italian economy and of Italy in generally. Well, we are, I would say, at the end of the cycle, for probably at the bottom line of the cycle. So I think now it's time to recover, to grow again. And all main economic indicators are going this way. You've seen also from the previous slides, from the previous presentation, that all the trends are going positive. We expect to grow next year, even though not in a very significant way, but I mean, the sign is turning to be positive again. So there's going to be a growth in GDP next year, approximately 0.6%, and then it's going to be 1.2% in 2015. And also consumer spending is going to grow again. The unemployment rate is approximately 12.5%, 12.7%, which is not that low, but it's not that high either. So, for example, with respect to Spain or other southern European countries is probably lower, because generally speaking, I would say that Italy has been pretty much more stable without going that bad, and probably without having a rebound that high. And also the political situation has become more stable probably in the last months, and we're taking advantages also from the reforms that the new government has taken into effect. So the overall outlook, I would say, is positive. And obviously, this has an impact also on the real estate industry as well. So the investments in last year, I would say mostly end of last year and starting this year, is becoming to grow significantly, especially from foreign investors, which has accounted for almost 80% of overall investment last year, and even this year the trend has been confirmed. So same situation. So I would say it is probably a good moment to join Italian market, and can have a different approach depending on your risk appetite and depending on the approaches you want to have in the market. But I think that maybe we can speak about this later on.